myself like.
Yo, what is happening, everyone? I hope everyone's amazing. I know I'm absolutely gassed. I hope you're as gassed as I am. This call is about to be crazy. The tunes have got me feeling a bit hyped up, and I know we're about to get some sauce. So just to let you know, first of all, welcome everyone. It's about to be mad. It's about to be crazy. My name is Ryan, for those of you that don't know me. Now, to tell you a little bit about my experience with these people on the call, because this call isn't about me, but to tell you a little bit about my experience with these people, I'm going to keep it short and simple. 8 months ago, I didn't know how to trade. I didn't know anything about trading, and I worked a job in construction. After 3 months of knowing these two individuals, I quit my job for trading, right? Was that because of me? It's mostly because of them. Now, these two understand, right? So we have Harry, Pips Cartel, right? We've got Harry Gadd, the legend himself. And we've got Kieran Davis, the master of coin, right? Both these two individuals are going to be going back to back. So Harry's going to be taking the first half. Kieran's going to be taking the second half. And then at the end, so make sure you're around, they're going to do a very big Q&A for everyone's questions and answers, right? Anything you need to know about trading and sniping the markets, these two are going to answer your questions personally, right? And they're going to spend a lot of their own time just to answer your questions. So make sure you stick around for that. But now, these people have been catching 1 to 20s, 1 to 40s, 1 to 50s, 1 to 60s, 1 to 100s, right? You name it, they've caught it. Now, just to, so you know about that, whatever they're risking, they're making 20 back, 40 back, 50 back, 100 back. You risk £100, you can do the maths yourself, right? I'm not the best at maths, but as you can see, these two people are very, very clinical and very good at trading in the markets, right? Now, these are, I like to refer to them as the smart money kings, Wyckoff kings, institutional kings, smart money kings, right? So now just to pass it on to our first speaker, Harry Gadd, the guy's an absolute legend, right? Someone who, anytime I've needed a call with him, I've just messaged him. He's hopped straight on a Zoom with me, giving me some help on the charts, right? This guy, I remember one time I marked up a chart, I sent it in the group chat, he was like, I've got the same thing marked up. Oh my God, when I saw that message, I knew the trading gods had blessed me, because if Harry's got it, just know I'm good, right? Now, with that being said, Harry, go ahead and take it away, bro, and drop the absolute sauce, man. I'm so gassed I got my notepad ready.
Bro. Thank you very much, man. We'll start this call. I just want to thank God or whoever you believe in for putting us all in the same frequency and being able to put us all together. This amazing community that not only makes a lot of money, but we also help each other stupidly. And yeah, it's got to take a moment, man. Got to appreciate it. Just got to soak it in, bro. 100 people on the call ready to level up. Yeah, let's go, man. All right, cool. Let's go. All right, for anyone who don't know me, my name is Harry Gadd, aka Pips Cartel. I've been in this industry for what now? About a year officially. Had a couple sticky months where, do you know what I mean, life got in the way, but the last 6 months, honestly. And who do I have to thank for that? The person I have to thank for that is Master of Coin, aka Kieran Davis, aka the GOAT. If I didn't bump into him in Sainsbury's car park, I wouldn't be here right now, and God knows what I'd be doing. So Kieran, appreciate you, bro. Thank you very much for having me on this call. Let's get started. All right, cool. Ryan, there's people saying enter in the room. Can you take over that or not? I don't think anyone can enter though. Kieran's got that at the same time. And someone let me share my screen, please. Thank you very much. Cool. So what I'm going to be going over today, not that, but if anyone caught this morning, beautiful, beautiful. Fortunately, I didn't partake, but anyway, let's get into it. So what I'm going to be going over today is just two setups that have happened. This one, I believe, happened last week, and the one before happened, I believe, 2-3 weeks ago. The only reason I'm going to go over these setups is it gives you a really good understanding of what we look for in the market, especially when focusing mainly on stuff like structure. I remember before when I first started, I always wanted to learn the next cool thing. I'd be in the group chat, I'd see people trading all these institutional candles. Let me find out about that next cool thing. Where if I was to master the basics, i.e. structure, because it's one of the first things you learn in the academy, I believe it would have took me a lot further than where I am today. But everyone has their own journey. I'm grateful for the journey I've been on, and I'm grateful for the journey I'm going. But if you're new to the academy, don't rush forward. Take your time. This is all a process. At the end of the day, this is a skill set that will change your life in ways that you can't imagine. Spiritually, mentally, financially. I've never seen a company or a platform that can teach you all of this. And yeah, it's just crazy. But so what the new guys to do is focus on the basics. Don't rush in and learn the new stuff because you've seen people in the group chat trading all these crazy things or whatever. Stick to the basics, master the basics, and they'll be the perfect building block for when you want to advance and gain more knowledge on the skill set. So the two examples I'm going to be going over, let me actually rewind this just so we can see how it played out afterwards. The first one is Euro USD, and the structure on this was really nice. So I'm going to, can I admit him? Cool. So what I'm going to do is I'm going to start on the higher time frames and just really break down how my thought process went when it came to this trade. So as we can, let's start on, and for anyone who is new in and like some of these concepts are a bit confusing, when I first even just looked at a chart, it blew my mind. So if you're new, just hold tight, and if you're a bit more experienced or whatever, you're going to know what I'm going on about. So just take some notes and let's elevate. All right, cool. So I start on the higher time frames because obviously we want the higher time frames. For example, this one candle we're on the monthly now represents a whole month. So in these time frames, in these candles holds a lot of data. So when we get a lot of compact data, we can see the true bias of where the market wants to go. So a lot of people can get sucked in on like the 1 minute and that without looking at the higher time frames and seeing where the actual direction of the market wants to go. So as you can see, we were forgetting all of that. As you can see, we were clearly in this last candle here, this buy before sell movement that left imbalance behind. For anyone who don't know, this was what we'd kind of class as an institutional candle. The reason being is the institutions have bought and sold in this candle here. Their sales are clearly in profit, and then they have to come mitigate their buy orders. I'm not going to go into too much depth about why and how, because I just want to show the core basics. I don't want to confuse anyone with too much information of things they might not need to know just yet. But this is an indication that we could be seeing lower pricing. So I'll hop down on the daily. The daily is the majority of my analysis because this is where you can get a real sense of structure and the current movement, if anything, of the market. Because obviously, like I said, on the monthly, each candlestick is a whole month. So if you're spending too much time on there, you're going to be waiting a long time to see anything play out. So as you can see, we started coming into this zone clearly bullish. If we go on the line chart, it'll be easier. So all bullish is it's going up. We have a series of higher highs and higher lows. Higher high, higher low, higher high, higher low, higher high. So then this is where I started to see the break of the downside structure is because this low here should have held if we wanted to continue going up. But instead, we broke straight past that. We go back on the line chart. And then we set in a low here. Broke the structure, set in a low, pushed up, retested this low, and then continued to drop. So now we have a new higher low and lower low. So this is the main range that we're going to be focusing on the daily time frame. So that from the daily, and then we'll focus on this piece of price action on the lower time frames. 4 hour. As I said at the beginning, where structure is so key, every time frame has its own structure. So although we could be bearish or bullish on the daily, doesn't always mean that's going to be the same on every single time frame, because to get a breaker structure on the daily time frame, you're going to need a breaker structure on the 4 hour. To get a breaker structure on the 4 hour, you're going to need it on the 1 hour, so on and so forth, down to the lower time frames. So obviously, all breaks of structure happen or start from below 1 minute and up. So what I was seeing here is obviously we're trading within this range. Obviously, where we've now created that new low, I can expect the price to come lower. But where we're in the market, I believe, like that previous monthly candle we saw, just take a quick look at that so we can compare it. We had a buy candle and then a huge sell-off that left imbalance. All imbalances is insufficient price action. That means it's only been traded in one direction. And the only people who can push market that much, because forgetting the time frame for the minute, but to be able to push the market and leave imbalance, you'll need to invest a lot of money. And the only people who have that sort of money are the institutions. And this is their footprints that they're leaving behind. So we can look on, let's look on the hour actually. It's a bit clean on the structure I was looking at. Cool. So we set in this new daily lower low, and then we started to create bullish structure. Bullish. Based on the structural points. Let me delete that and that. Cool. But what happened? We came down, pushed up, and failed to momentum buyers to the first.
Yo, Harry, my bro. Harry, can you hear me, bro? Your signal keeps cutting out. Like, we can barely hear you, my bro. I'm not sure if you can hear me, but we can barely hear you, my bro. I'm not too sure why, but can you hear me now? Harry? Harry? Yo, no, someone put something in the chat, please. Like, I also want to make sure that everyone's here. Okay, so I think Harry just lagged out. Oh, at least Mo's got his space on the call now. So, guys, sorry for that. Whilst Harry's hopping back on, let me real quick just message him, guys. Please, the institutions don't want us to hear this. Guys, give me 1 sec. I need to quickly get hold of Harry and make sure I can admit him. Yo, 1 sec, guys. Apologies for that, but yeah, guys, just please bear with it, and we'll be getting this on the roll shortly. 1 second. In the meantime, whilst we're waiting for Harry to hop back on, where's everyone else tuning in from? Where are you guys tuning in from? What countries? Oh, let me turn my camera. What countries are you guys tuning in from? We got Nottingham, we got Leeds, we got Dallas, sheesh, Sheffield, come on, Alabama, we got Dublin, sheesh, we got Silence, Crawley, big up Crawley, perfect. Yeah, 1 sec. I'll make space. Yeah, cool. 1 sec. Let's go wait for Harry to join. We got international. We got Cyprus, South Cornwall, Atlanta, Georgia, USA. Sheesh. I feel bad. I have to like decline some people in the waiting room, innit? I'm so sorry. Man's in space. Come on, bro. Of course they're in space, man. Bro, of course. TP straight to space. Not too sure where Harry is. Guys, I'm literally gonna give it until 20 past. If we can't get him back on, then I'm just gonna kind of take start with my section. Give me 1 second. Yo, what's the wait 1 sec, guys. I'm not sure what's happening with Harry. But yeah, I'll literally she got New York. Sheesh. We're running crypto to the moon. Come on, bro. Let me just see what he's One sec. He's coming back now, guys. He's coming back now. He should be here any second. But guys, like this source we're about to go through, man, is gonna be crazy. I appreciate the love for the green screen. I appreciate it. We got Lux. Sorry, Lux, I can't let in your other phone, bro. We need to let Harry in so we can continue with the trading. All right, I hope this is Harry. Are you Harry S? Who's Harry S? XRP to the moon. Come on, guys. Yo, you know what? Whilst we're waiting for Harry, I'm gonna give you guys some nuggets on crypto in it. So, guys, we're in alt season right now, right? We're in alt season. So this is the time here where you're gonna start to expect Ethereum and other coins. Try again. There we go. Don't worry. Harry's back. I bet. But guys, thank you so much for your patience. Thank you so much. Thank you so much for for understanding. So we've got Harry back. Let me just go ahead and give the host to Harry again, and then he can take things away. But thank you for thank you for your understanding. Let me go ahead and make Harry host again. Harry, my bro. You should be able to unmute yourself.
Yo, I apologize to absolutely everyone. Internet got clapped out quick. Where did I get to, Kieran?
Bro, like you was on the daily time frame and it just cut off, innit?
On the daily? Oh, you're joking. All right, cool. Let me go back.
I was just sitting there for like 20 minutes, bro.
Oh my God. I was dropping bombs. Cool. Can you hear me good?
Yeah, all perfect, man.
Can you see good? Lovely. Well then, back to the top. Cool, so I'm going to start again because obviously I don't know where the internet got clapped. But so as you can see, coming into this monthly candle, this monthly point of interest, we had clear bullish price action, lovely up, down, low, high, low, high, low, high. And then we had this big sell-off, which in turn broke this structure point here, showing me that price now might want to move to the downside. And as you can see from past price action, although I'm not saying price might completely obliterate down here, but you can see there was clear bullish intent to get up here. And now the market's just probably kind of exhausted and just wants to come back to create equilibrium within the markets. So let me just get rid of those drawings. That one, that one. Cool. So let's go on the line chart. You can see it a lot better. So I go on the line chart. If structure's kind of unclear, then the line chart really helps show you the true swing points when it comes to stuff like this. So as you can see, we had the low, high. Class that, never forget that. High, low, high, broke this structure point, came up and retested. So although we classed, so the way we trade is called smart money concept, well, there's so many names for it. And obviously we use the term retail traders, but technically we're all retail traders. So for the purpose of this call, I'm just going to say retail traders, but technically what it means is just how the masses trade, because we know that the masses, well, what's the percentage? 90% of the masses lose. So for this instance, I'm just going to use that term, okay? So as you can see now, we've broke daily structure. So what we could expect from this point is a retracement into this daily candle to create a new lower high to follow the structure. And then we could see more selling off. So where was we? We were here. Cool, I have rewinded it. So I'm going to jump down onto the hourly just because it's a bit clearer. So we were trading within this range here from this daily higher low and this daily lower low. So all of this right now is just a complex pullback. I'm not going to go obviously too much into that. It's just a good way to sometimes you'll see two structure points and then you'll see a lot of movement within it. And then you'll get confused. Is it bullish? Is it bearish? Like what's going on? When really it's just a way of price taking a while to get back up to that point where you want it to go, to then continue the sell-off in this example. So as you can see, we started to create bullish structure. We had the low set in, high, push up, low, retested this area, push up, done some sort of distribution up here, came back down. And from a logical standpoint, forgetting the higher time frames, for example, forgetting the higher time frames for a minute, if we saw this sort of price action, what we could expect is the price to create a higher high above this area, because that's just following structure. But what happened? Price came up into this area and failed to. I'll show you a clean example, obviously, what distribution and that is in this second on my other chart. So we failed to create a higher high, and then we continued and absolutely died. So a lot of people would see this as the break of structure, but I personally didn't. I was waiting for this break of structure here, because like I said earlier, this is all technically a complex pullback until we break past this low here, because this is the low which created the high. So all of this in here is just noise. So once we broke this low, this is when I was going to be interested in looking for a position. So naturally, what do? We follow the trend. So in this example, now we've broken a low. We've now got a new lower high, well, a high and then our new lower low. So what we could expect now, we've broken technically this structure point and this structure point. New sell-off, respecting this high. Can anyone still hear me? Put something in the chat box if you can.
You're good, my bro.
Yeah, cool. So this is when now we've identified the structure on the daily. I'll show you on the 4 hour as well. It's a bit ugly on the 4 hour, so I won't really pay attention. But as you can see, we identify the break of structure with the bodies, and this would still be a break of structure. Although this on the 1 hour was a nice body, on here is a disgusting wick, but we technically still broke below this range. So to my eyes, that's a valid break of structure. So now we're bearish on the daily, we're bearish on the 4 hour, and we're bearish on the 1 hour. So what we could expect is to look for sells. That's the ideal situation, because it's always better to trade with the trend, because you'll have a higher probability of your trade going in the direction you want. Is there space? I'll try and let that person. All right, cool. So now we've identified everything on the daily, 4 hour and 1 hour. What we can do is hop down to the, I believe it was 15 minute, yeah. I'm just going to right here, daily. Bearish. This is always good if you sometimes forget the overall direction of what move you're trying to look for, just to note down the whether it's bullish or bearish on certain time frames. So now 15 minute, we're looking at a 15-minute bit of price action. What can we see? We can clearly see it's now bullish. So this shows me that we're in a retracement. We're in that bullish retracement to then overall take this market lower. So this is what, so we had this low, high. Although you could class this as the low, I believe this was the most valid low, because this is the low that created that new higher high. And after all, it's a higher high is only valid. No, the low. The low is valid if it creates a higher high. If this came up here and failed to create a higher high, then this wouldn't be valid. So then what can we see in this area? Let me just delete those blue lines. It's a bit confusing. Consolidated. Simple terms, we consolidated, but for all the people who have a bit more knowledge and a bit more experience within this is clearly like some sort of accumulation. Price made that nice round off in price, and then we pushed higher with a lot of intent, leaving a whole lot of imbalance here. And what we know about imbalance is this is insufficient price action, so it's unfairly traded. And we know that the market likes to have equilibrium. So it will always, not always, but it very highly likely tends to come back to these areas. So I looked in this area, and the first thing I saw was these candles here. So what these tell me, after, like we said earlier, you can only move the market with this much force if you have a lot of money. So what the banks do is they buy and sell within this area to hedge themselves into position, and then their buy orders, once they're ready to move it and there's enough liquidity markets with their buy orders. They inject a lot of buy orders to push price up. But that means that they're now going to have sell orders trapped in this candle that they need to break their position even, which we call mitigating. So all that means is they're mitigating their position. So they're taking their profits up here and then coming back, because the banks don't use stop losses where they've got so much money and technically they're buying like physical contracts or whatever, like physical currency. They have an ideal stop loss, I guess, but they don't have a physical one. So they're never going to get stopped out the markets because frankly, they move the market. So they don't ever need to take a loss. So what they need to come and do is break these sell positions even, and then they continue with the direction in which we're going. So from basic understanding, this is the last sell candle to buy. We took out these lows here. So that would, some retail traders would have put their stop losses down here. And we technically took out those lows as well. So there could have been some liquidity under there also. So from the standpoint, you could have simply took this trade like this. And as you can see, price came down to this very slowly, which for me is always a good sign, because if price comes down like a knife, then that shows maybe that's not going to be valid and they're not going to want to mitigate and continue going in the valid direction. But as we can see, the price was quite evenly traded down here. So you could have simply took this trade like that. But as you can see from the risk to reward, it's only a 1 to, what is that? A 1 to 3.65. So although we say minimum is 1 to 3, I personally see it as, do I want to open up my portfolio to only get 3% back? Because at the end of the day, capital preservation is key. That's why over trading will destroy your account. It's always about quality over quantity, because if you took one quality trade a week and it hit a target for say, or if you took loads of trades, you had couple stop losses, couple big ones, couple big wins, couple stop losses, it's firstly affecting your psychology to always be trading within the markets, because at the end of the day, we're investors. So we need to see this as an investing game and not as let's go down to Coral and spin something on the roulette. So what I done, I believe this came in, what time did this come in? 4 o'clock. Oh yeah, so the reason I put these here, the trading ranges, is just to remind me where we're trading in between, because there's nothing, because there's nothing worse than looking at the market and then completely forgetting where you are. So for all my fib lovers, as you can see, this was clearly in the key fib zone that we like to buy. Although fib for me isn't a necessity, it's more of a little extra confirmation. All fibs are showing are a discount in price. It's not some special number that as soon as it touches price is going to fly. It's just showing you the almost sale that you can get off the price. So what I done was I waited for us to get in this area. And as you can see from the analysis, start back on the daily, all time frames are fractal, so all time frames move the exact same. So if I didn't show you the time on this chart, it'd be very difficult to guess what chart this is, obviously, unless you've looked into EU for a while. So 15-minute. So we've got this clear bullish intent. So what we can expect for price to come up to our area, and then we can continue. So we can expect price to rally from here. So what I done in the morning, I believe it was, yeah, London Open. So this is what I was seeing. In our point of interest, this is how you can really narrow down those risks to rewards and really elevate your account, basically. So we was in this 15-minute point of interest. And what can we see? What time was this? Did this happen? Yeah, like during Asia. Cool. We had these sort of relative equal lows forming. Although they're not perfect, I don't believe they have to be, because obviously when I first started the academy, I was learning your basic support and resistance concept. And I don't believe I ever saw a chart or learn to just draw a straight line there. How I saw it was, it's zone. So although they're not perfectly equal, this is definitely a zone of where retail traders, let me put the plane on so you can see it better, where retail traders are going to be looking to put their buys, meaning wherever they'd put their stop loss, meaning there's now liquidity under these buys. So what the bank wants to do is come and take this liquidity so they can hedge into their position and then continue with the valid direction. but I am just going to draw a line back there because it is a lot cleaner. Trend line. Cool. So what happened? We had the low setting, and then we had the lower high setting. So now we're trading in this range. We come down, take out these equal lows, aka liquidity, and then have a very bullish move upwards. So this, if you were looking at this, say if you wanted to sell it, you might have been looking to sell here, for example. The reason I wouldn't have done that is I wouldn't validate that as a break of structure because it spent very little time there. That's a lot of the mistakes I used to make in my journey. I used to see it go just below that point and think, oh, lovely, break of structure. When in reality, all that is a manipulation. If price came down here and started spending, some time down here and then maybe came up, then cool, then you could validate that as a break of structure. But where price just had a harsh sell-off and a big push up, that to me is a manipulation. And the fact we've taken out this liquidity and we're in a 15-minute point of interest, we can definitely start looking for more buy opportunities here. So before anything, what we'd have to see a break of this high, low, low. Normal structure would have went boom, boom. So the fact we broke here is the confirmation we was after to then look for buy positions. So let me just fast forward it a little bit because I believe. Pause. Oh, look at pause, lovely. Cool. So what happened? We took out this liquidity and set in the low. We rallied up, broke this structure point, and then set in the high. So let me just draw that trading range again, just so everyone can see. Let me delete that screen as well. I got trading range. Yeah, lovely. Cool. So this was the trading range we were looking in. Put that at the top. Text. Cool. So this is the trading range we were looking in within here. Once again, for my fib lovers, whether you want to draw it from the wicks or the body, it was in that zone, no matter where you draw it from. So once again, nice little extra confirmation. But if you're in the academy and you've done the bounce back course, you're going to have learned a lot of little tips and tricks. One of them, like I personally, I didn't really like it. Like I heard about it, I listened to it, I watched it, I noted it down until Kieran started implementing it. So when Kieran started implementing it, I started to say, okay, cool, Kieran's an absolute beast and one of my mentors, so whatever he's going to do, I'm definitely going to look into. I didn't just blindly start using it because you should always prove something to yourself before you start trading it, no matter who says it, whether it's Kevin, whether it's whoever, Mark Douglas, Pips of Persia, although Pips is the GOAT. But if he tells you to do something on the markets, you back test it and then you come to your own example, you come to your own reasoning of whether you would want to continue with that. Because for you, it might not fit your criteria or something that you want to look at. So calm, just because he does it, doesn't mean you need to do it. But I started to back test this and it was very obvious that this was clearly a common occurrence. So what we can see, are we in the 1 minute? Yeah, cool. Quickly go back to the 3 minute. So my entry zone that I was looking for was the open of this sell before buy candle. I'm gonna go in after I show you this play out. I'm just gonna show you quickly how you could have really cut down this risk to reward to, I believe it's like just under a pip risk by just looking on a different time frame, something I clearly missed when I took this trade. But for this example, so what this is, this candle here on the 1 minute is where London opened. And John Phibb taught that you should buy under London open or sell above London open. So if you're looking for a sell position, you wait for London open and you wait for the sell, because that gives you more chance of catching either like the lower of the day or the higher of the day, or just the lower high of the session. Because then that means that's usually manipulation to that side. And then boom, we can continue going in the direction that they wanted to take it in. So as you can see, we've obviously it's rewinded a bit more, but 3 minutes. Let this load. Cool. So what time was this? 8:09. Let me just draw. So I have certain times when I trade. It's between 8 o'clock and 10 o'clock. 8 o'clock, yeah, 8 o'clock and 10 o'clock. And then from about, sometimes it's about 12:30 to about 3:30. I'd prefer to wait till after 1, but sometimes entries do come just before 1. And then once a New York session opens, it moves. So I'm always a little bit flexible. Let me just check the chat box. Did you say sell as well in London Open? Yeah, cool. So say if you're looking to sell, you want to sell above London Open. And if you're buying, you want to buy below London Open. Lagging out. Am I good? Am I good? Someone said I'm lagging out in the chat box. I just want to make sure I'm good. So I assume I'm good because no one said anything. Cool. So as you can see, price came here. Let me check chat box. Make sure I'm good. Nugget, thank you. It's called my G. Cool. So then we can watch how price played out. So this is my perfect sort of setup. When it comes to the market, something I've realized that's the good thing about the market. Sometimes you'll realize things about yourself that you wouldn't have known before. Before I didn't know I was impatient, but then when it came to these markets, I realized actually impatience was something I really struggled with. So my ideal sort of setup is in and out within the same day. I don't like holding trades overnight. I like to get in, for example, say London, and then get out coming around the end of the New York session, because then I can go to sleep risk-free, knowing that I'm good and I haven't got anything to worry about. Let me see if this is loading. Do you still have your GPP? Yeah, I'm going to go over that, G. And do you mean London Open? Yeah, London Open, bro. So give me 1 second. I hope my internet don't get clapped again. One question: what the session's time? I can't seem to. Of course, I don't know why this isn't loading. What's the time? All right, cool. I'm running out of time. So let this load, and then I'm going to quickly go over to EG quick and show you what I was looking at there. Why isn't this loading? The delay, guys. My internet's clearly all this lockdown. Everyone's using the internet apparently. Cool. We're back. All right, let me quickly whiz through this, and I'm going to quickly show you EG. Now I'll pass it over to the GOAT. Cool. So as you can see, actually, I don't even need to rewind it. So as you can see, price touched in just after London Open, impulsed all the way through London, and then we came up to this area where we wanted to take a sell during New York, and then as you can see, the higher time frame structure agreed with us, and we completely sold off. So this is showing you that although we overall would want to look for sells, with the knowledge of structure on different timeframes, you can capitalize on the retracements also. So that was Euro. Let me just quickly whiz through EG. Sorry guys, I know we had a little bit of a delay. Cool. So now it's probably one of the best trades I've caught. I'm not going to go over this too tough, but well, Harry wanted to ask, does it work for all pairs? You can trade anything with a candlestick. That's how I see it. Obviously, I only trade Forex pairs. I don't trade anything else, but from what I believe, it's anything with a candlestick. Cool. So I started this. Let me just start on the 4 hour. Yeah, cool. So I started this analysis, let's say daily actually, because I want to show the cause. Cool. Let's start on the daily. Let's do this quickly. Let's run through this. Cool. So as you can see on the daily time frame, the first thing I spotted was all of these equal lows. And as we know, price is attracted to where it's going to hurt the most people. So I believe that price definitely wanted to come here. All these equal lows on the daily time frame, the banks are coming there to take out whoever still has a position there. So then we hop down on the 4 hour and we can see some sort of weird looking distribution phase. Although this isn't ideally how big and stuff I'd like to see it for the range we were in, it was clearly a distribution. A distribution is, how can I explain it? It's a mechanism to turn the demand, so the buyers, into supply, which are just the sellers. And you can see different examples on different timeframes of it. So we started in this clear sort of distribution looking thing. But once again, the main thing I wanted to focus on was structure. We came up here and reacted off a 30-minute IFC in here, came down and broke this structure point. We came up, failed to break past here, and continued to make another low. So to me, we're definitely bearish. Distribution, all this liquidity down here, lower lows and lower highs. So then we come up and we can expect price to react from this area, because it's the last buy before sell candle that the banks are going to need to come mitigate their orders out of. So we can hop down on the 1 minute, on the 1 hour. That's me. Rerun price, so then keep jumping. What can we see again? In this area, approaching this 4-hour candle that we were looking at, we again had another distribution. But look how similar this distribution is to this one. This had 4 equal lows, but 3 equal lows, and then we had the breaker structure. Usually we like to see a solid breaker structure, for example, a sign of weakness before we have the UTAD or something. But in this instance, it didn't. So what did we have? We had lows, but then we had this thrust. So this was the final up thrust to take all of these sellers in. But what this was doing was inducing more buyers into the market. Retail traders would have seen this and boom, slam it back down. Final straw for me was when we came up, we tested this area. We are still technically, in my eyes, bullish because we haven't broken any significant structure. We came up, destroyed through this momentum trend line, continue to remain the lows to induce now more buyers here, creating more liquidity, came up, reacted off this area here, and then boom, then we finally broke structure. This is when I happily said, let's get involved in the markets and find something. So what I saw on the 4-hour, we had this little candle here. To me, that's known as a drop-based drop. So all that is that candle is slightly representing distribution or redistribution on the lower time frame, which we know is an area of supply. So price come up here. I did have an entry in here. I'm not going to go into it, but it was very, I think it missed it by like 2 pips. And I think the stop loss was like 2 pips, but it didn't happen. So no point thinking about it. So you could have, if you wanted, taken your trade off this candle, but 9-10 pip stop loss, I'm trying to really minimize my stop loss to get maximum reward. So what I saw was we reacted to this area, long wick to the upside, and we closed bearish. So to me, that shows that it's a valid area. That was a strong sell-off in my opinion. Hourly, no, let me hop on the 15-minute, I believe. Cool, so we had minor break. When we sold off, we had minor breaks of structure around here. We didn't have a solid breaker structure. On lower time frames we did, but because of the sell-off, very bearish sell-off, left in balance, I thought that was a valid area and it was my time to look for re-entries. So what I done was hop down on the, firstly, as you can see, we're on the 15-minute. You could have took it off that last buy before sell candle, but what I saw, we go on the 2-minute. This is a very, very clean example. We had that last buy candle for the sell-off. This was the candle that caused this move to the downside. So that's why I believe this was the true institutional candle that we wanted to be trading off. And we didn't need our stops anywhere above that, because if it came above that zone, then to me, the trade wouldn't have been valid. Let me just put that entry there. So as you can see, we broke all of this minor bits of structure. We came up. This is where I say I enter sometimes a little bit before 1, because look, we came to entry around 12:30. The only thing that put me off was we came up and created equal highs. As we know, price likes to come and take out equal highs. But once we broke this structure here, I went break even just in case of this. But as you can see, we had that last touch of this zone. And then for the rest of the week, this is the longest I've ever held a trade. It was, I think I entered on Monday and it closed it on Friday, I believe. So it took a week, but then again, it paid off because it meant I didn't have to trade for the rest of the week. And I could almost see this as like residual income. It was paying me more every single day. So this actually ran, if you took the entry base of that 2-minute, it would have been a 1-62. Mine was slightly higher because I think I had like, it was like 2.7. I believe I had like 5 pip stop loss just to count spread, because the broker at the time that I was using, the spread was a little crazy. So I had to give myself a little more. But either way, just going off that analysis, that would have given you a 1-62. But if I'm honest, I should have had the investor mindset. I'm just going to quickly show you on the monthly. No, let me just go on the weekly. we have even more equal lows down here. 1, 2, 3, 4, and imbalance. So realistically, if we were really in that investor's mindset and I felt like holding a trade for 700 pips, which is something I probably won't be able to do. If that did end up coming down to our zone of imbalance below those equal lows, it could run for a 1 to 200.
Yo, bro, it sounds like your headphones are connected. I think you're.
Are they?
Yeah, it's better now.
Cool. Yeah, well, that's it anyway, guys. I had some. Where are my notes? Let me just make sure I've done everything. Yeah, cool. That's all covered. Yeah. So if anyone got any understanding from this, I hope you did. Obviously, I know the internet got clapped, so I apologize for the lack of connection. But I hope some of you got value. You learned a few things. If you did, make sure to go tag me on my Instagram at GadLTD. Hit me up in the inbox or the DM with any questions that you want. I'm here to help. That's why we're in this community. And for all my people in IM, keep going. It's going to pay off. And for all the people that are not in IM, you're playing because this is the best company in the world. So I'm going to pass it over to Kieran, my mentor, my brother, my day one. I've known Kieran since he was a young puppy in primary school. We used to be on the playground together, and now we're on the charts together. Kieran, I love you, bro. Thank you for giving me this opportunity. And I just want to hand it over to you, brother. Thank you.
Sheesh. I appreciate you, my bro. I appreciate you, man. So, guys, if you just got value from what Harry just went through, yo, drop some 777s in the chat because, wow, that was some sauce. Sheesh, man. I can feel the money already, man. Sheesh. Guys, so first things first, Harry's Instagram is GadLTD. Please show some love to him on your IG. His Telegram as well. I'll put it in the chat box here. Yeah, cool. So, guys, now let's kind of get in some similar source. Now, I did have a few things I wanted to kind of go through today. Now, where are we? Cool. So, let me kind of talk you through this little setup on Euro USD. Now, this is a cheeky one. Now, we're going to ignore current price action, and I'm going to keep price rewinded to where we actually see it. I'm quickly, Ryan, my bro, I'm going to make you host. Please, can you admit? Thank you very much. Bet. So just to make sure everyone can hear me, they can see my screen. Let me get a 111. If you can hear me, you can see my screen, and you're ready to dive into the world of charts. Sheesh. Bet. So, cool. So first things first. Let's kind of give you my top-down analysis. So first things first. I always like to have my rules on my screen. Where is this? This one. And I like to do this as well. I like to ask myself these questions. I like to ask myself, am I in a good headspace? Am I feeling tired? You know, am I trading for the sake of trading? You know, have I prepared for this trade? And am I preserving capital, or am I just jumping in the market? These are the most fundamental questions I always have to ask myself before I get into the market. Because before we get into the charts, like, I want you guys to understand that you don't even trade the market. Like, if you think you trade the market, you played yourself the entire time. Sorry, let me just put my phone over here. Guys, you don't trade the market. You trade your belief system about the market. So if you're if your mental state, right? If your mental state is not solid, if you're not neutral, if you're not in a great headspace, if you're not an abundant mentality, you're going to be projecting all kinds of rubbish onto the charts. You're not going to be seeing the markets for how they are. You're going to be imposing your will on the market. I know, like look, put a 111 in the chat if you've ever struggled with over trading, right? Trading too much, not following your rules. I'll put 111 in the chat all day long, right? And the thing is, this over trading comes from your headspace. You know, are you trading to literally just trade? Like, I'll be real, right? I do this full time. You know, I've been doing this full time for the last year, and I get bored sometimes. I'll be real with you guys. Like, I'll be real with you, yeah? So sometimes I find myself just on the charts, just to be on the charts. So this is why you need to be doing other things instead of just trading 24/7. But we're not going to go into too much mindset. Just let's get into the chart. So anyway, I always do this, always ask myself those questions. I will quickly put them in the Zoom chat if you guys want to save that. And I will quickly put my checklist there as well. There you go. Cool. So I always like to have my checklist on screen as well, just to kind of see everything. Now, first things first, I don't even start on this chart. I come to this special document called Seasonality Charts. Now, if you don't have this, it's going to be very hard to send this to everyone. But obviously, I'm trading Euro USD. This is the only currency I trade. But looking at Euro USD now, I want to come ahead and look at the Euro seasonalities because I want to see how Euro tends to perform throughout the year. Now, this time of day or time of year, this trade, this is the daily time frame. This is in the start of January. So this is around the first couple of days in January. Now, let's look what happens historically in January. So typically, Euro in January, right? Let me annotate. Typically in January, right? Start of Jan, we get a little, I'm talking about here, we get a little spike, a little push up before we completely collapse and sell off for January and then start accumulating into March. And obviously, we go up. So when it comes down to it, if I see that again, this doesn't tell me, oh, buy or sell. This just gives me a general feel of what can be happening in the market, if that makes sense. So because I know, I bet little rally before dropping, that can give me a potential bias as well. And I think the dollar did line up with this one specifically as well. Yeah, the dollar did line up perfectly. Dollar index at the start of Jan rallies, so that means Euro USD is going to drop. Double bearish confirmation. So already I can see that, okay, bet before I even get into the charts, I've got a narrative. Now, don't let these seasonalities program your mind. Just keep that in the back of your mind. Remember, structure is everything. So looking on the daily time frame, obviously we can see prices starting to slow down at a much higher point of interest. Now, if you actually look on the weekly, where we've got this whole institutional area here, right? We've got this whole distribution phase where what happened, again, I'm not going to get into it too much, but this is our supply zone. Now, once price, again, approaches our supply zone, just trying to sell it from there, again, I don't really fancy having a 282 pip stop loss. So we're going to refine it. So daily time frame. Now, looking at the daily time frame, what can we start to see? We can start to see professional distribution play out. Now, how do we look for professional distribution? Time of the week, time of the month, seasonalities, and through this secret sauce right now. So fuck it, I'll teach you guys this. So this indicator here, I use this for divergence. And the only reason I use this is to look at the professional accumulation and distribution. Now, this is very different to RSI or stochastics because RSI and stochastics just goes off the candlesticks. Accumulation and distribution basically goes off the volume and the difference and the fluctuations each day. So typically this, again, how do you add it? It's literally it's the first indicator on indicators. I don't know how I get to normal ones, but here, script name, accumulation / distribution, add it on the chart. Now, what can I see? I can see price start to rally, and then I can see price start to drop on here. Now, this is a daily time frame, right? This is daily distribution. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days. 16 days of distribution, and it still hasn't melted. That means cause and effect. Bigger cause, bigger effect. If the cause is going to last for a week, we're going to get an effect for a week. If the cause is going to last for a year, I guess we're going to last for a year, right? So also looking at potential targets, we've got these relative equal lows here, liquidity down here. Again, this is just a massive, super high time frame. We've got inefficient price action down here, imbalance. And again, I'm not going to be teaching all of these concepts because, again, that's what your academy's for. But cool, you got your imbalance there as well. Now, let's looking on a lower time frame. Looking on a 4-hour time frame now, we can start to see, now again, this big candlestick here was not actually one, I wasn't actually basing my trade off this big 4-hour structure, I can't lie, because when I was looking at the chart, this wasn't here. Obviously this big bearish one. But again, we can see that divergence. We understand that divergence is in play. Now, dropping down to an hourly time frame, we can start to see the evidence of this distribution, right? We've got our liquidity being captured. We're manipulating the highs, and we're starting to break structure to the downside. We're manipulating highs, breaking structure to the downside. We've got gaps. We've got other potential targets. Now, time of the week, very, very important, right? A lot of us wonder, oh, why is it we're losing trades? Why is it I'm losing this trade? Because you're buying in professional distribution and selling in professional accumulation. How the market works is it goes in cycles. It has 3 days one way and 2 days the other. 3 days one way, 2 days the other. 3 days one way, 2 days the other. I'm gonna say that again because you need to write that down. It goes 3 days one way and 2 days the other. For example, right? What date is this? Right? Let me put on the session breaks. So this is the 7th of January. 7th of January was a Thursday. 7th of January was a Thursday. The market, right? Typically, if you get Monday bullish, Tuesday bullish, Wednesday bullish, typically Thursday and Friday, you're going to be seeing profit taken. You're going to be seeing distribution. You're going to be seeing sellers enter the market. Now, again, it's not as soon as Thursday happens, sell. It's look at the structure, look at the market, look what the chart's telling you, and apply and have that in the back of your mind. So if we get that Monday, Tuesday, Wednesday, we can expect to see that Thursday evening, and then Friday, and obviously continuing into next week. So again, I'll let you guys backtest that. Please don't just, again, anything we're teaching, please don't just take in, don't just hear it, but go back and backtest it, prove it yourself. If you guys want to know more about that weekly cycle, go and watch Zach and Jordan's Go Live. There's one of their recording sessions. John Fibonacci broke it down. I believe it's like 2 Fridays ago. Just DM me for the link. DM me on Insta, I'll send you the link. But anyway, sorry, I need to put my phone on Do Not Disturb. Like, it's going crazy right now. Anyway, so looking at this now on a 15-minute time frame, we've got our breaker structure. So obviously it was in a bullish environment. High, higher low, higher high. Now we're approaching, look where we are. This is the 6th of January, right? We're in that higher time frame area. Now Wednesday, typically come into Wednesday, Thursday, if we've just had Monday bullish, right? If we've just had Monday bullish, if we've just had Tuesday bullish, Thursday, Wednesday, we're now going to expect that potential Thursday and Fridays might be down days. So we got our breaker structure. Now, when it comes to our higher time frame supply and demand zones, I do look for certain lower time frame confirmations. There's 4 situations we look for. Again, we look for head and shoulders, breaking structure, distribution, and liquidity captures. So again, I'm not going to go through all this today. It is a lot to go through, but keep it simple. We've got a breaker structure. The reason this is the structure is the most important thing is because the only thing that moves the market is an imbalance of supply and demand, right? The only reason that price moved from here to here, the only reason was not because Jack from down the road or Elon Musk tweeted or Wall Street bets, which Wall Street bets are a load of shit anyway, but that's a whole nother convo for another day. What happens now is there is no more demand in the market. There is no more aggressive demand in the market because think about it. Guys, to move the market by 1 pip, right? The only people that move the market are the institutions. No other person can move the market. No one. Unless it's super, super low cap. That's a whole nother convo, especially Forex, right? We're talking over $10 trillion every single day are being traded. So to move the market by how many pips is this one move, right? That's 84 pips, right? Do you know how much money that required to move that? So that's showing you evidence that at bet supply is now evidence. Supply is now dominant in the market. So what do? We've got our supply, but again, it's still Wednesday, right? I'm still not looking on a Wednesday to be selling if we've had Monday, Tuesday, Wednesday bullishness. Doesn't make sense to me. I need to wait for my evidence. You see, a lot of us, again, I can only speak from experience. A lot of my problems in the market came from me imposing my will onto the chart and me trying to tell the market this is what's going to happen, rather than letting the market show me what it's doing and then forecasting appropriate moves. And that word there is very important, guys, forecasting. So what do we see? So we got a breaker structure. So we're now in bearish conditions, right? So the last low that led to a new high got broken. So this is the last high that led to a new low. As Harry likes to say, this is now our trading range. Now I'm just going to delete these red boxes because again, this is a higher time frame supply zone. So Kieran, why didn't you just sell it up here? You know, why didn't you sell it up here? So first things first, the reason I didn't sell it up here off this candle is because my stop loss is going to be a bit big. My stop loss is going to be 7 pips. And I mean, you know, like, don't get me wrong, this is still going to be a good risk to reward, but it does meet my entry requirements. Time of day. This is at midnight. I'm not really going to enter a trade at midnight. Or not, I'm never going to enter a trade at midnight. I'm not. So I need to wait for London open. I need to wait for my session opens. That's how I trade. You need to get a time of day to trade, right? I always trade London open, New York open because of the entry drill, which we're going to go through in a minute. There's specific tactics to trade session opens. And once you can combine these tactics with your smart money concepts, it just gives you that extra, you know, factor. I don't know what to call it. Anyway, so we come up to this supply zone here. Now, another reason we didn't sell off here, time of day, plus what happened. Now, pull up an indicator again. Accumulation/distribution. This is showing you what's happening in the market, like the actual volume. The accumulation/distribution indicator can't be manipulated. This is based off volume. This is based off orders that have been placed in the market. This is fact-based trading. We're not here to guess. We're here to do fact-based trading. We're here to let the market show us, and then we react, rather than not doing that. So anyway, cool. As price comes up to here, again, we diverged in that point of interest. Very nice. Very nice. What do we see? We see the market faking people. Guys, the candlesticks, they lie. They lie sometimes. But volume and order flow can never lie to you. You see here, this is a manipulated move. Price got manipulated higher because this is distribution. This is the market distributing. Now, what happens? You know, if you really, I mean, look, for my schematic junkies, if you really want to get into schematics, like, you know, I didn't mean to flip that. We can really start to label this up, but again, that's too much for now. So anyway, we've got that distribution, divergence, it's the same thing. Divergence is good enough. Now, what are we seeing? We're seeing bearish structure. So boom, lower low, lower high, internal structure, we break. So on the lower time frames, we're now bullish. So I need to wait for evidence. I need to see the market prove to me. Again, if I was planning to sell up here, which I was planning to sell, that was my original point of interest up there. Let me delete these other points of interest because these weren't useful for our analysis. But again, like, I need to see those lower time frame confirmations. So what happens? We get that higher high, higher low, higher high. If anyone is selling up there, I'm sorry, but you're a madman. Like, you're selling against bullish price action. Like, I can't be doing that. So we get that lower low, breaker structure. This is just confirmed to us that our higher time frame structure break here is now confirmed. It's now valid because our time frames are aligning. You know, think of the foreign exchange market like you're a lawyer, right? I'm not a lawyer, but I know lawyers, and I know lawyers build cases, right? Lawyers gather evidence, they build cases. So you got to be basically that person. You're trying to convict the market. That's what you need to do. You need to convict the market. So you got to build a case. You know, you can't just go up into a court and say, here you go. You know, this guy, you know, he owes me £1 million. Why? I said so. No, we need evidence. You need proof. We need to get into that mindset of let the market show me rather than let me show the market. So again, time of day, right? This is not even in our entry windows. So I enter after 8 a.m. I'll tell you. So my entry windows are between 8 a.m. This is GMT. So this is, GMT, 8 a.m. to 10:30 a.m. 10:30. And then my second entry window is 1 p.m. to 4:30 p.m. So obviously, if it comes to these areas, if it's not in that time, I'm not trading it. Why? Because, well, liquidity, right? Think about it. If a currency pair like Euro USD, well, what countries govern it? Euro, which is this area, and then you've got dollar, which is America. So what time zones are they going to be operating in? That's where we can use our Forex time. Is it the time zone converter? I don't think I have the website anymore. Oh, I do. Forex time zone converter. So anyone who's not in the UK, you can use this website here. I'll put it in the chat. Yeah, and obviously it tells you the opening times. Brave browser, you woke. Come on, bro. Gotta get those free cryptos, man. Do you only trade pairs and with their correlated times? Yeah, 100%, 100%. Because like I'm not like Euro USD, most of the volatility is going to be during the London session or the New York overlap. So I don't want to be trading that out at that time. The reason I stop at 10:30 is because typically between like 11ish, 10:30, 11ish, and around 12:30, that's when people eat their lunch. I remember listening to Mark Douglas, and Mark Douglas, he used to trade on the trading floors. Now, quick side tangent, but he was actually with a bunch of traders, and he was like, he saw this support level, he saw price react off it once, react off it twice. Obviously, smart money traders, we know we don't buy off that. But anyway, Mark Douglas, right? He was like, I bet it's reacted twice, it's going to come down again. He said, look, I'm willing to buy now. Anyway, it comes down again. He goes and buys the market. And you know what happens? It goes straight for you. It goes straight for you and FUs him. Now, not because it was an FU, but you actually want to know what happened. You see, Mark Douglas actually knew the people who were moving the markets. He actually knew the people in the trading floors. And he actually asked one of the managers at this trading floor, like, what happened? And he goes, oh, bro, I was at lunch at that time. So sometimes you can lose a trade just because the banks weren't there. Like, guys, that's another thing. Institutional candles, they don't have to react to be mitigated. But that's a whole nother combo for another day. Anyway, bearish price action. Lower low, lower high. Lower low, lower high, lower low. Now, time of day. 8 a.m. Where's 8 a.m.? I think the chart is literally on 8 a.m. Yeah, this is 8 a.m. here. So this 5-minute candle is 8 a.m. So what was we looking at now? So we actually scaled this down. I believe it was a 3-minute, or was it a 2-minute? I think it was a 1 minute. You know what? I think it was a 1 minute at this off. This was a while ago. Anyway, so looking at this. So price comes down, forms our low resistance lows. Now, structure. Higher low, low low, lower high, lower low. Breaker structure, bullish, 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 bearish. Bearish, 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 complex pullback. Look, this is the last high that led to the new low. This is the last high that led to the new low, right? Each time frame has got its own structure. So I did have this point of interest up here marked up. I did have this one marked up, I can't lie. Now this was just an example where, look, sometimes like you just gotta bite the bullet in it. Like, you can't predict the future. If I would have, took a 0.5% loss there, I don't really care, because the next trade, this is what was this? It was like 101 to 150, I think, maybe higher. 1 to 160, I lied. So cool. Guys, a 1 to 160, like, you can afford to hit stop loss a couple times. It's not that deep. Like, now obviously it's calculated risk. There's a difference. Now I had the calculation of, look, realistically, I don't see a reason for price to come higher than this level here, because I mean, there is a little bit of imbalance. That's why I was a little bit like, potentially price could come up there. And if it does, I would much favor that sell up there than I would here, 100%. Now, what happened? This candle mitigated that candle. This took care of any orders that were in there. Right? Wait, let me draw. This took care of any orders that were in there. Right? Any orders that were in there got taken care of. So where it needs to be mitigated? This is the last point. It needs to be mitigated. Right? This is the last point. Now, here's the entry drill. Let me move this here. Cool. So the entry drill. I'm going to give you guys a mad nugget now. I don't know what that red box was. Now, who wants a mad nugget? Like a mad nugget. So, London Open, you always look to buy above the London Open in price. So, let's say, right, we come here to the candlestick at 8 a.m., right? 8 a.m. candlestick. Mark up the open, New York Open. Sorry, London Open. So, typically, at these session opens, there's no volume straight away. So what needs to happen is some volume needs to come in the market. So during this volume that comes in the market, this is where you get your fake outs. This is where you get your, again, if you're in bearish conditions, they're buying to sell, right? So you sell above London or New York Open. If you're in bullish conditions, you buy below because they're going to sell to buy. So this was our London opening price. Now, confluence. How convenient is it that, you know, our point of interest is above London Open? Very nice. Now, looking at this trade here, what happened now? Now, some people would have identified this as an institutional candle, this one here. Now, I mean, technically you're not wrong, but you would have actually got taken out. You actually would have got taken out there because your stop loss was just above the wick. You would have got taken out. So in this example, if you would have got taken out there, when you see the next candlestick close as a bearish engulfing, that could have been your re-entry. And again, you could put your stop loss. I mean, your stop loss would be slightly bigger above the wick, but because you've got that bearish engulfing, basically your FU just got FU'd. So if you wasn't in from this high POI, in that case, you would just had to stomach the loss and enter again. But you don't enter just because, look, if we didn't see this bearish engulfing, right? Seeing that, you're a bit like, you know what I mean? You don't know. But now it's like, okay, bearish engulfing, boom. Like this thing is about to die. Above London Open. Remember where we are. Start of the month. Remember from the higher time frame. Seasonalities, right? We've got days of the week, time of day, high time frame distribution. Like this is one of the this is how you get those monster trades because your higher time frames are now aligning with your lower time frames. So look what happens after this. Where was our targets? Well, I will talk about trade management as well. Here we had a potential demand zone down here. So actually, I lied. This was your demand zone. Anyway, so this is a potential demand zone. So what now? This is how you manage your trades because a lot of people, guys, they look. It's not about winning. It's not about getting your entries. It's about getting your exits as well. You see, I don't actually know. Like I can have all the conviction in my in my mind. I can have all the probabilities on the chart, but I don't actually know when I'm in this trade if it is going to react off here and go higher. I don't know. Let's be raw. I'll be raw. No one knows. No one knows. If anyone says they do, they're lying. So what we do when we have these areas, we call them devil's advocate positions. Now, a devil's advocate position, shout out Curtis Cobain. He's a G for this concept. But it's basically when you're in a trade, always start looking for the opposition so that you can manage your trade accordingly. Now, from here, it was literally just price comes into the area, broke straight through, was good to go. Now, realistically, look, the way price dropped off from this zone, come up mitigated, there's no reasons for price to come higher. So when I was up about a 1 to 10 on this trade, which was around, which was around, where was the 1 to 10? I think it was, oh, no, I don't know why this moved. The 1 to 10 was around here. It was this low, yeah. So as we hit this 1 to 10 here, I had an alert go off. Like a hedge. Sorry, I'm not sure what you're referring to. If you can remind me what I was. Oh, yeah, like a hedge, like a hedge. But we're not taking the buys. We're just looking to see how price reacts. Yeah, so like a hedge. So here was a 1 to 10. So at this point, what I did is I took 10% of my volume off. So let's say if you had, let's say you risked $100, right? And your account was, okay, forget your account size, but let's just say you dropped to 1.0, right? Turns out 1.0 is $100 risk. What I would have done now, 1%. So what I would have done now is because you can close your partials, you can close part of your lot size. If you don't know how to do that, please contact your sponsor and they will show you. But what I did here, as I closed, 0.10. So that Because again, if you risked $100, you're up $1,000 on this trade, right? You're up 1,000 down here. You're up 1,000. So you can take $100 off, take that $100 off, take that 0.1 off, which is 1%. There's no more risk. There's no more risk. No more risk. And it did actually come up for re-entries, to be honest. Like, I mean, I don't think the risk reward on the re-entry was the best, but yeah, I mean, yeah. But anyway, like, if we just go on a high time frame and play this out, long-term targets. Where's the session breaks? Again, let's look into targets. So targets, we had this gap down here, potential magnet. We had liquidity here. We had liquidity here. Oh, what the hell? My bad. We had liquidity here. We had a little bit of liquidity here. We had major liquidity here. Major liquidity here. Higher time frame. What was this? Stop losses below here. And all this imbalance down here. And if we play this out, again, it's a 4-hour time frame. You can see the price just absolutely, it just absolutely went, wait for it. There you go. Done. And now we're here. So when it comes to it now, Euro USD, I need to do some more markups, but I think we might have made a bottom and we might even go higher and probably accumulate a little bit longer. But I'll show you guys. Yeah, so this is a 1 to 160, meaning you risk 1%, you held full volume, you make 160%. You risk $1, make $160. I'm not host, so whoever's on doing the waiting room, please can you let some people in? Wow. So yeah, let me look at the chat box. Where will this recording be? Most likely on my YouTube. If I decide to post it. When the price gets those devil's advocate areas, are you monitoring lower time frame to make sure it's not breaking structure for a potential reversal? What's your decision criteria if you want to take profits? Yeah, so I'm not going to pause the recording for this. So basically, right, what I'll look for in these areas is I want to see a couple things. So higher time frame point of interest. So if we go into classroom mode for a second, let's say bullish conditions, boom, 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 boom. Price is doing its thing. And let's say, oh my God, I didn't mean for that to be so long like that. Come in. So let's say we're in bullish conditions, right? And, you know, we've obviously bullish conditions, broke structure. Let's just say we've got our institutional candle down here. We're looking to potentially look at or whatever, right? When price, you know, arrives at these areas, you've got to be a madman to just buy it there because, cool, this black line's a, you know, let's say an hourly time frame, let's say, but the orange line is going to be a 15-minute time frame. Each time frame's got its own structure. So, boom, 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 boom. So what's going to happen now? I mean, yo, if you're buying off there, you're mad, innit? You're crazy because how do you know that's, you know, cool, we're in an uptrend, but lower time frames are in a downtrend. So I want to see a couple things. Now, I'm going to actually pause this a little bit. Oh, I can't pause it. Fuck it. We're going to get into it. So 4 things. I'm going to go through this really quickly. Number 1 is a head and shoulders. So I want to see left shoulder, head, right shoulder. Now, for these, for the head and shoulders, it needs to be equal highs or a BOS, right? Yeah. So that in that demand zone. So in this hourly demand zone, left shoulder, head, right shoulder, or break a structure. So prices, let me zoom in. You know, you've got this last lower high that led to a lower low. This maintains structure. Price enters your demand zone, and we wait for the reaction. Price reacts. So I'd set an alert here. So this is what I'll do. I'll set an alert here. Price comes in. Ping. Pay attention to the chart, Kieran. Bet. What am I doing? Look at the chart. Look at my downtrend. Bet. Alert here. Ping. Ah, break a structure. Game time. Now what? pull back into institutional candle and buy. And that way, your stop loss is completely minimized. And again, this does work for the devil's advocate. I know you asked for that. So it'd just be a case of if you got something like this and you was selling for whatever reason, then you'd want to start think about getting out of that trade, or at least closing partials and leaving a little bit to run just in case. So yeah, head and shoulders, breaker structure, equal lows. So equal lows get formed, FU'd, breaker structure, mitigation for the snipe. Or obviously risk reward would be higher. Or I want to see free drives to the downside to give me that distro. Oh, so I want to see that, that divergence. I want to see those preliminary supply, selling climax, automatic reaction. You know the rest, and then go higher. So they're the 4 things that you'd want to see in those areas to tell you if the trade is going to be valid to enter or valid to take profit as well. So let me know if that answered your question, bro. Can you get insane? Sheesh. Which time frame is the best? There isn't. They're all the same. I mean, the market's fractal. It literally doesn't matter. Like, it literally doesn't matter what time frame you're on, because the market essentially knows no time. I mean, look, it reacts on the daily. It reacts the same off if it does on the 1 minute. But what I would recommend doing is doing all your time frames. So oh my God, yeah, I think we might have just set a low for EU. Anyway, let's say fucking weekly, monthly, daily, 4 hour, 1 hour. So you got your different time frames. They do mean different things. So like you've got your monthly, your weekly are going to be your super high time frame. Like these are just if we're looking for mad reversal points. I don't spend too much time on monthly or weekly. I mean, more so daily. Daily kind of gives me a directional bias. Same thing with a H4. But when we start getting into our 1 hour, our 15 minute, and our 5 minute time frames, these are typically our intraday positions. So basically 4 hour and above is more swing, and then 1 hour and below is more intraday, and then 5 minute and below is more scalp / entry. And obviously what you want to be doing is you want to be getting in a scalp trade, but holding it with a swing target. And that's how you get those monster trades. What educators teach the strategy? So come to this website, bouncebacklaunch.com/bootcamp, and everything's there. Do you focus on a couple pairs or don't matter? This is what I trade. And I don't even trade Ethereum on margin. I just use that for divergence. I only really trade Bitcoin if there's a swipe trade called. And I'll look for confluence with it mainly, but mainly just Forex, to be honest, just EU. And a DXY as well. The DXY as well, obviously for divergence as well. There's another trade we actually had in here as well. Like these are a couple 31 to 150. Where are they? It was, I might have to go on MT4 to find the entry. I believe it was somewhere in here. We was looking for a lower time frame entry. I can't remember if it was or not. If I can't find it, I will pull up MT4. I think it was here. Yes, it was here. No, it wasn't here. Okay, we might have to pull up MT4 for this one. But so if you have a 4 hour POI, once it gets down, you jump down to the 5 minute or 1 minute, pretty much. So let me walk you through today's price action on EU. Oh, I didn't want to delete everything. Keep that. So, for example, right? Oh, let me replay this all back. So, I didn't mean to fuck it. I'll keep all that. Anyway, so we've got this daily institutional candle down here, right? And delete this to keep, and delete all this, so you guys can have a fresh mind. Perfect. So let's look at this now. So weekly, okay, potential imbalance down there. He's about to fly. Anyway, so daily time frame, right, where this little institutional candle here. There's not really any imbalance. There's no imbalance lower. So anything down here has been taken care of. There's no real agenda for price to come lower than this, to be honest. Now it could do. It could, maybe come down and take care of this gap or something. But I don't know if we're going to see it that low because of seasonalities. So Anyway, we approach this daily institutional candle. Drop it down 4 hour structure. You've got your lower low, lower high, low. Ooh, no, I want a highlighter. I want the lower low, lower high, lower low, lower high, lower low, lower high, lower low. This is your last high that maintains structure on the H4. H4 structure, right? So this is our 4 hour structure. Now, again, 4 hour is more swing. So if you're going to be in a higher time frame point of interest, remember the trades, they're going to naturally flow from the lower time frames, right? They're going to build up, a weekly move starts on a 1 minute time frame. A weekly move starts on a 1 minute time frame. But again, like Harry said, you need to be careful with the 1 minutes because you can get sucked into the 1 minutes and Anyway, looking on the hourly time frame, what do we start to see? We see an absolutely gorgeous. Fuck it, we'll delete everything. We'll go again. Absolute gorgeous. We know where we are on the daily time frame, right? We're in that daily institutional candle. So as we approach the zone, again, I didn't actually manage to get filled on this trade because it didn't actually present me the entry requirement 8 a.m. in the morning, unfortunately, but this is a textbook setup anyway. So we had last 1 hour structure. Now, again, when I was looking at this bullish candle wasn't there. Now, on the 50 minute, if we pull up our trusty accumulation distribution indicator, what do we see? We see signs of professional accumulation. How do I know? What day are we? Guys, what day are we? What day in the week is it? What happened this week? Think about it. Monday, Tuesday, and Wednesday. Selling. And Thursday, selling. And now we have NFP today. Potentially, news might be used as an excuse for us to take our profits, right? Because when you take your profits, when you get out of the market, like if you're buying, you got to sell your order. If you're selling, you got to buy back your order. So profit taking, we get signs of professional accumulation. Divert. Oh, whoa, why has this gone so skinny? Give me, make it thick. Where is it? Make it nice and thick. There we go. Boom. Manipulation. Market is getting manipulated to the downside. And then, the accumulation / distribution indicator is moving to the upside. You see that? That is convergence. If anyone is I would recommend taking a screenshot of this because that is that is very good divergence. Now, again, time of day, time of week. This is Friday, right? This is coming into Friday. We put our session times on. We understand Monday, Tuesday, Wednesday. If they're down days, come Thursday, Friday, we might start to expect accumulation. Oh, how convenient, right? Look what's happening, right? Look what's happening. Monday. Wait, look what we started on Monday. I think it even gave us the distribution up there. Oh, I don't think it's going to want to load that far back. Oh, maybe it does. Okay, no distribution up there. But anyway, we have Monday, Tuesday, Wednesday, Thursday, 4 days of selling. We're going to talk about oversold. That's oversold, bro. So, Friday, we've got NFP. Okay, we understand that news is an excuse for liquidity. So, let's look at the chart now. Let's let the chart tell us what to do rather than our emotions tell us what to do. So, we've got our bullish signal, all right? Now, what also happens? Equal lows, purged, multiple preliminary supplies. Again, preliminary supplies, guys, it doesn't just happen once. And this labeling of the schematics is just from experience, to be honest. But look what's happening. We're getting that. What's happening, guys, is there's demand all the way down here, right? Let me pull up a little photo for you guys. I'm going to blow some minds with this. You see, when it comes to the way institutions trade, and obviously they're the ones who move the market, they're very particular with how they move the market. Now, if you've got, for example, 100,000 buy orders, right? You want to put in 100,000 buy orders. You won't be able to execute your 100,000 buy orders like me and you, Because the way me and you execute, we're spot executing, boom, there and then we pretty much get filled at the price we put in. Now, when it comes to banks, if they want to put in their orders, you're going to see disgusting manipulations. Disgusting. You won't even be able to do anything. So what I want to show you is an order book. Where is this? Let me show this order book. And if you can understand this, this is going to change the game for you. So here's what an order book potentially looks like. Now, what do we mean? Imagine this in the middle is your neutral price, right? Equilibrium. Now, this is, zero. Not really COT reports. COT reports, in my opinion, are a little bit unreliable because it's old data. But anyway, so this is zero. So if you guys were selling something now, I want this to be interactive. So if you guys were going to sell a house, right? Let's say it's 100K. Make it simple, right? If you had a house to sell for 100K, would you rather sell it at 110K or 120 or 140 or 200K? You guys tell me. Yeah. Same thing. 200, right? You want 300, of course. Yeah, you want the higher prices. So if you've got 100,000 orders that need to be filled, what if there's only 20,000 orders here? What if there's only 40,000 orders here? And what if there's only 60,000 orders here, right? So if a bank wants to get filled, think about this, guys. They can't just sell it, let's say this is, let's think of a number in a chart. Let's say this is 30,000, 30, 31, 32, 33, right? If you want to sell at 30, well, they need to go up to the next level. They have to go up to the next floor to get filled, right? They have to go up to the next floor to get filled. So they're seeking liquidity. They're seeking the money. So they're going up to get filled, because they got 100K orders, right? You physically cannot fulfill 100,000 orders with only 20,000 stuff. Like, it's not going to work. So they have to go to the next supplier. It's like, imagine I had a drop shipping store, which I do, right? If I got 100,000 orders and I've only got 20,000 products in stock, well, okay, I need to go find another supplier ASAP. So same thing in the market. And it's the same concept for a buy, right? Now, if you're buying something, you want to buy it cheap. Would you rather buy it 100K, 90K, 75K, 50K, or 30K? Of course, you'd rather buy it at 30K. So the bank's got 100,000 orders that may only be, again, 20,000 orders here, 20,000 orders here, 20,000 orders here, and then the rest at the bottom. So they have to go and seek and find the low prices. That's why you obviously buy low and sell high. So how does Wyckoff relate to that? Now, this may take some time to get, but once you train your eyes, once you start to get and understand supply and demand, it will start to click. You see, when we're, for example, coming into these areas, why do you think you see in a schematic, right? Selling climax, automatic reaction, secondary test, up thrust, secondary test in phase B and spring. Why do you think you see that in a schematic, right? If I pull up an actual schematic, give me 1 second. I appreciate everyone's patience. If we actually pull up a schematic for a second, why do you think you see a schematic, right? What do you think is making this happen? They're dipping into the demand. Oops, look. Oh, no, I need that. Come back. Yeah, there you go. Look at that. They're dipping into the demand. So as you see, they're building orders. So as you see price coming lower, you're going to see reactions get bigger. You'll see reactions get bigger until they're big enough and dip into enough demand till it goes. That's also how you know you're in accumulation. But again, this is, but let me know if that's making sense so far. Cool. So as we approach this area now, look what we're seeing. We're seeing the dips into the demand. Dips, and that's what your preliminary supply is, those dips, those multiple dips. Now, usually I do like to see my schematics, right? I do like to see my selling climaxes give me a volume climax, but I didn't actually get that selling climax here. I mean, potentially, I guess you could call that, is it? If you wanted to. This is the thing. Schematics are open to interpretation. Like, the labeling doesn't really matter, to be honest. It's as long as you've got the the main kind of market behavior, the manipulation of the lows and the BOS to the upside. But anyway, so this is how I interpret it. Selling climax, automatic reaction. 5 minute might look even better. Yeah. Selling climax, automatic reaction, ST. Wait, selling climax, ST, up thrust, action. Now we're in, this is phase A, right? So phase A is that stop in action. What's happening? You're witnessing the initial demand get absorbed, right? That's why I do like to see a big climax, a big volume climax, but you got phase A that stops, right? The price stops. Now, phase B, what's happening? During phase B, you're building a cause. This is where people are getting confused. This is where people are buying off this institutional candle here and getting clapped. This is where people are buying off here and getting clapped. This is where people are selling here and getting broken even. This is where, again, people not understanding where they are. So the purpose of this phase B is to, again, get all the impatient people out. But remember, time of day, we're not going to trade during this time, right? This is a midnight UK time, right? And I think it actually came into this around, what is it? Around like 6 p.m. Yeah, so this is out of the trading window anyway. So what happens now? We move into phase C, where we get that manipulation, we get that shakeout, we get our spring. Now, when it comes to springs, I do like to see a low volume spring. And did we get a low volume spring? Not so much. So again, the volume on this example is not the best, but it's cool because structure is king. Anyway, we do get a minor accumulation down here as well in the spring. So if you, again, I wasn't trading that time. I don't trade at 4 in the morning, but there was a minor accumulation down there if you want to backtest it. But anyway, structure. Let's look at structure, right? M1. So let's look at, where are we? So where are we here? Cool. Structure. Now we were looking to do this at London Open. So yeah, when it comes to London Open, yeah, anyway, so I always trade for London Open. That's the key. So look what happens now. Higher high, higher low, higher high. Oops, I missed. Higher high, higher low, higher high, lower low, lower high, lower low. Break a structure. What do we get? This is, well, this, I can call this 101 things. You've got your head and shoulders. You've got your, it breaks a structure. There's so many things. Break a structure. What happens is also a mini accumulation because we manipulated lows. We FU'd. So we can go ahead and mark this up as the open. Now, again, I didn't actually take this trade, unfortunately, because of the time of day. This was 7:59. I have to wait for London Open. This is the power of having rule-based trading. But this is still a good example for you guys to train your eyes to. And again, targets, there's a lot of super high targets for this. If we just target the 4-hour structure now, oops, where are we? With that 4-hour structure, 4-hour imbalance, that's a 1 to 30. And again, this could potentially come a lot higher. We need to do a lot more in-depth details. But yeah, it came in. Literally, this kind of, I'll be real. It annoyed me, but it didn't at the same time because it's like I followed my rules. So I didn't enter the trade because it didn't follow my rules. That's the thing. You guys got to get very clear on, bro, that's the thing. Like, you got to have that discipline. Look, I know it's 1 minute out of my entry window, but I don't trade to make money. That's what you guys got to understand. Like, no one should be trading here to make money. And if you are here to trade to make money, you need to stop trading. Because fundamentally, you don't make money in the market by trading to make money. You make money by being disciplined, managing your capital, and following your rules. What are your trading objectives? Right? I remember I had a conversation with someone, and he was a very consistent trader and had a lot of success. And then he started doing something. He started basically experiencing not that success anymore. And I was speaking to him, and I was like, bro, like, what are your trading objectives? I was like, yeah, man, so I want to retire my parents, I want to do this, that, and the other. And it's like, don't get me wrong, that's valid, right? Of course, but that's not your trading objectives. You see, if your trading objectives are to pay your bills, if your trading objectives are to make money, if your trading objectives are to do anything apart from follow your rules with discipline, unemotionally, you're going to be influenced by that. And your perception of reality is going to be warped because you're now going to be emotionally involved. And emotions, they're a lens on your perception. So you don't see the world as it is, you see it as you are. So, yeah, we're getting deep into this, isn't it? So what I'm saying is, when you're trading, this is why it comes back to, again, there's a method to my madness, guys. What was the first thing I showed you? Mind. Boom. Am I in a good headspace? Am I feeling tired? Am I trading for the sake of trading? Am I following my plan? So yeah, unfortunately, I didn't enter this trade, but you know, like sometimes that's the thing. You gotta like watch them like that. Sometimes you gotta watch the market just go without you, isn't it? Like, and for my fractal nature of the market, look how mad this is. Yeah, look at this. We've got the little. This was so beautiful, isn't it? This was so beautiful. Look. Oh, look at that, bro. Look at the little divergence. Oh, bro, and it just fucking rocketed after that. Look, wait. Let me take you guys back to where we was. Jesus Christ. Look. All right. Look at this. So London opened. Where's my indicator? Where's John Phibbs gone? Come here, boy. There we go. So yeah, so London open, boom, London open. Look where London opened. I'm gonna, if I'm buying below London open. That blue line's London open. It happened after. It happened after. So in that case, I mean, maybe you could have entered off this, but I don't really want to enter off that. Again, my trading plan doesn't tell me that's the IC candle. My trading plan tells me that's the IC candle. So that could have been a 1 to 50, but again, coulda, woulda, shoulda, didn't happen, so we're not going to look at it. But yeah, I hope that, guys, like gives you a bit of insight into, you know, rules and actually what we look for trades. Now, there's one thing I'm really excited to share with you guys before we get into our Q&A. And I'm just going to quickly go through this. This is a little bit crypto related. That's my watch list. Go away from that. So I want to show you something mad, yeah? Real quick, right? Real quick. Who wants to learn how to multiply Bitcoins? Real quick. Let me get a 1-on-1 in the chat if you want a crash course on how to multiply Bitcoins. Really quick. I don't see enough energy. I don't think y'all want to know how to multiply Bitcoins. I don't think y'all want to know how to fucking multiply Bitcoins, bro. Like, I actually don't think y'all do. Okay, stop, please, stop. Yo, my Zoom's gonna crash. I was joking. I'm gonna show you. Allow it, man. Allow it in the chat. Allow it, please. My computer's gonna crash if you keep doing that. So, let me cool. Let's get into it. So, what you can do is do something called ETH against Bitcoin trades. So, check this out. So, just how currencies have, you know, exchange rates, cryptos have exchange rates. Really quick. We're gonna go through this. So check this out. You're right. So you can see the schematic, smart money, so you can see where we're going. So long story short, if you would have brought Bitcoin back in 2015, right? Sorry, Ethereum, not Bitcoin. If you would have brought Ethereum back in 2015, check this out. Ethereum was 50p a coin. 50p. If you put $1,000 into Ethereum, you'd have 2,000 Ethereum. Check this out. Ethereum went for a season where it outperformed Bitcoin. It went for a season, and this we are in alt season right now. Alt season is a season where altcoins outperform Bitcoin. Look at this. Look at this massive ROI. So check this out. If you would have purchased 2,000 Bitcoins, sorry, 2,000 Ethereum, I keep got Bitcoin on the brain, 2,000 Ethereum, now 50p each. 50p each. Check this out. It then had this all-time high of 0.1573159. That means every Ethereum you have is worth 0.15 Bitcoin. Check this out. Look how many Bitcoins you could have got. So you had 2,000 Ethereum, you brought a 50p. We come on Binance and we go ETH BTC. Sell at this, no. At this price, you had 2,000 Ethereum, right? You would have made 314 Bitcoins. 314 Bitcoins. Compared to back on what? 2015, what was the price of Bitcoin? No, it was back when, no, $200. $200. You can only brought 5 Bitcoins back then. You guys get that? Let me break it down one more time. Yeah, I don't think some of y'all got that, innit? I don't think some of y'all got that, bro. Like, look. So, Ethereum in 2015 was 50p. Bitcoin was $200. You could have brought 2,000 Ethereum, which would, if you now check this out. If you would have rid Ethereum to its all-time high was 1,600. So 2,000 times 1,600 is, quick maths, 2,000 times 1,600 is, wait. I think my maths was off here, but I did the maths properly the other day. So if you would have invested 1K in Bitcoin, sorry, in Ethereum, you would have had $168,000. You see what you could have done in that quick bull run in a 4 months. This is just off one of the bull runs in 4 months. With $1,000 invested, again, I'm not a financial advisor. This is past profits don't guarantee future results, etc., etc., etc. But when Ethereum goes to outperform Bitcoin, what you can do is then it will get to a point where Bitcoin will then gain dominance, because what happens is the money flow. The money will flow out of Bitcoin, go into the altcoins. They outperform Bitcoin, then they crash, and because they're shit coins anyway, and the money goes back into Bitcoin, and Bitcoin continues higher. So use your altcoins, guys. Use those altcoins to get Bitcoin. I don't want to speak too much about that anymore, but I just wanted to sprinkle a little bit of sauce in it. But yeah, 2,000 Ethereum back at 50p a coin, yo, you would have had 314 Bitcoins. I'm not a financial advisor. Past profits don't guarantee future results. So that pretty much concludes my part. Let me unmute Harry. So guys, who has some questions? Let's get into a Q&A for me and Harry. Let's keep this to and I have to stop the recording as well. But yeah, guys, so for those in the recording, yo, thank you so much for tuning in, guys. If you want more information about mentorship, you want more information about how to get involved in this community, send me a message on Instagram and we'll get you started. Cool. There's the recording done.